This morning, I listened to a podcast that described the housing market as diseased. What does that mean, and how does that affect Florida housing? Hi everybody, I'm Melanie Atkinson, realtor with Compass in beautiful Tampa, Florida. This morning, during my normal podcast listening time, I ran across one that really caught my eye. It was from The Daily, which is a New York Times podcast, and it was titled, How the Cost of Housing Became So Crushing. I will link it in the description. It had some great points, a lot of which were broad national points. I wanted to focus in on Florida specifically and how the issues affected the Florida housing market. I also wanted to add my perspective as a 45-year Florida resident and a career real estate agent in the Tampa area. As you're watching, please don't forget to hit those thumbs up and subscribe buttons. Let's get into it. The main focus of the podcast was to try to understand the root of the housing crisis and how affordability got so out of whack. It's easy to look at the short-term issues like the COVID years, interest rate hikes, general inflation that affected construction material costs, but those things don't even come close to telling the whole story. As they explain in the podcast, the housing market had an underlying disease. It was already sick when all of the short-term factors started happening. Understanding the disease is the only way to come up with an effective treatment. Too often in today's online world, we have reactive videos and doomsday content creators that are always trying to fix the problem by saying the market is going to crash. They have been saying that for years. So let's, for one video, stop talking about a crash and focus on where the actual problem started. To do that, let's go back to the Great Recession that's typically referred to as starting in 2008. As we all know, it crippled the housing market, especially in states like Florida. We had to work our way through what seemed like an endless supply of short sales and foreclosure properties. What is less talked about, and what they explain in the podcast, is that builders during the Great Recession stopped building. They went from building over 2 million homes nationally per year to around 600,000. Builders laid off their workers, had fire sales for the vacant property they owned, and a lot of them went out of business. Further, once the recession was over in 2012, it took a while for builders to ramp up their productivity again. They didn't immediately start building over 2 million properties. That 4 to 6 years of underbuilding and not keeping up with future demand is the root of the housing market disease. So we already have a situation in 2012 where construction hasn't kept up with population growth by millions of houses. We are in a supply hole. To make the situation more complicated, the oldest millennials are in their early 30s. They are financially independent and they want to buy or rent apartments and houses. Also, in 2012, we have a record number of smaller households, single people, divorced couples, people that can afford and want to live alone. It is a devastating combination of factors that will lead to years of supply issues in the housing market. A couple of things that I want to talk about regarding all of this and Florida specifically. We had a huge new construction boom here, especially between 2003 and 2006. There was a massive demand, and a lot of those houses were being bought by investors that would turn around and sell the properties for a big profit. But that demand came to a grinding halt towards the middle of 2006, not 2008, which is the year people always think about as the beginning of the Great Recession. Obviously, in order for the housing market to collapse the whole financial sector, it had to be in trouble well before. I felt this personally because in mid-2006, I was selling 2 houses, building a house, and working for a high-producing real estate agent in Tampa. The housing market went from a frantic pace to crickets in the matter of months. Builders knew this was happening in 2006 and they started to adjust, reduce prices, and cutting back on projects then. New construction was practically gone in the Tampa area of Florida from 2007 to 2012. And it really wasn't until 2015 that builders had really ramped things up again and new communities were taking shape. That was 9 years of underbuilding in the Tampa area. One other thing that wasn't talked about in the podcast were the lending regulations that really restricted home buyers after the Great Recession. If you were a breathing organism, you could qualify for a home loan in 2005. By 2012, you had to practically promise your firstborn child to the banks to qualify for a home loan. Now, it's totally understandable that the government and banks would tighten the access to loans for underqualified people. We didn't want the same thing to happen again that caused the recession in the first place. But what this did was create a pent-up demand during those early recovery years and pushed a lot of people out of the market until their finances were almost overqualified, which means we had more than enough buyers during the late teens to gobble up the inventory that builders were now building. We were never able to get out of the supply hole, and we certainly never got to the surplus we were going to need during the COVID years. So, in a nutshell, that's how we got to the diseased housing market at the start of 2020. Maybe it all would have worked itself out fine had COVID not upended everything. Builders would have continued to build, and migration patterns would have been more predictable. We could have eventually balanced it out better. But instead, we got the tremendous demand of the Great Migration at a time when building supplies were increasing in cost, labor was harder to find, thus much more expensive to retain, and private equity companies were outbidding individual buyers. We had low supply, high demand, and high costs, which made every type of housing more expensive. That's how we got here. And these prices have been frustratingly stubborn. When we talk about inflation in general, housing costs are the single biggest factor that have affected the pocketbooks of Americans. If your housing costs go up significantly, then you have less money for everything else. It is a vicious cycle. So what's the answer to fixing the housing affordability issue? If I knew that for sure, I would certainly have a bigger platform than this. But there are a few things I do know for sure. Fixing it requires truly understanding it. It requires major surgery, not Band-Aids. We hear all the time about the Band-Aids, lowering interest rates, giving money to first-time homebuyers, restricting private companies from buying. Don't get me wrong, all of those things are important, but they do not fix the root of the problem. Our population is not going down, it is increasing. Housing is a basic need and a tangible asset, which makes it such an important part of our overall economy. We have to, on a local, state, and national level, put housing supply as a priority. Now, I realize that people get very nervous when talking about housing supply because if you have enough housing, then your house value might not keep increasing, or it might even go down. This is a societal issue that I would love for you guys to talk about in the comments. Let me hear all of your thoughts and ideas. Thank you all for watching, and if you're looking for something else to watch on this channel, check out a video I just did about wealth migration in Florida. See you next time.